Market trend is a vital concept that every trader needs to understand, and that's exactly what we're covering today. Looking at this daily chart of the US dollar yen, we can see that price turned around and began a push upward. The first thing I'm going to do is draw a trend line over the candles to make the highs and lows a little more obvious. For this, you'll also need to define what constitutes a pullback in a trend. For this example, I'll use a minimum of 2 consecutive counter-trend candles. I'll start by finishing the downtrend. Now we get our push up of 4 green candles, and in this move here, we have 2 consecutive red candles. So I'll draw another line down. We have a push up to here with 4 consecutive red candles, another push up to our high, back to our low, a large push up, 2 candle pullback, a push up, a pullback, another push up, and a pullback. Okay, so now I'm going to mark each of these points as highs and lows. Now if we hide the candles, it makes it very obvious where our highs and lows are. For an uptrend to occur, we need higher highs and higher lows. So I'm going to mark this with a vertical line using Option V. And although we know where the market is going, let's break it down like it's happening in real time. I would like to draw a couple of horizontal lines that will help me indicate where the lows and highs are. Now I will use an orange line for my high and a purple line for my low. Now as we push the market forward, we've got a minor break there. I'll push it forward one more just to confirm. Now we can see we're breaking this high. Now this is our first indication that we may be moving into an uptrend. It's not a confirmation yet, it's an indication. We have broken this previous level here. And there we are. We have 2 consecutive red candles amongst this move. Remember at this point, we don't know that this is the low, but seeing as I've had a push above the previous high and we have a pullback of at least 2 consecutive red candles, I can now mark this as our current high. Now this is framing out the channel. We have one move that breaks the previous high. We have a pullback of at least 2 candles. Now in order to confirm this as an uptrend, we need a break and close above this current high here. So at this point, we don't know this is a low. For all we know, we could have several red candles following it here. So at this point, I wouldn't have drawn out this trend line. I just want to make sure it doesn't break and close below this previous low. So let's continue forward. We're getting a push up, and now that we have broken this level, it confirms that we are pushing up into an uptrend. Also, as we break this high, I can now move my low marker to the most recent low, and that low being here. We will mark out the lowest point of this pullback, which is here, and that now is our trend channel. What we are waiting for is another push up with a 2 candle pullback. So let's push the market forward again. There we have it, at least 2 consecutive red candles. So when we have that 2 candle pullback, we can mark this as our new high. Now we are waiting on a break of that high before we can move our low marker to indicate our new current low. And there's the break there. So at this point, this becomes the low. Now we wait another 2 candle pushback, which we have there. So now this becomes our new high. That is right on. And there we have the break. So now it becomes our new low. We have a high, we have a 2 consecutive candle pullback. So now our high is up here. Oh, we have a break, but not a close above. Now that shows a little bit of resistance at that line. So I would not consider that a new high as we have not broken and closed above it. So while this is a high technically, it's not a trend high for me. It's also up to you in your rules whether you would like to mark this as your new high without adjusting your new low. Here we have the break of what would be both those highs. So at this point, it doesn't matter which of these highs it was. We have a break that fully clears both of them. So we'll find our low based on which point is the lower of these 2 sections, and it is in fact our first low. So regardless of where we have this high marker, everything happened within our channel and within our low. So at no point did we break the trend here. We are still in an uptrend. So we're pushing on up, and actually here's some points that we haven't charted yet. So we have a new high, we can bring that up here. And now we can chart them as if it was happening in real time without our trend line showing us what's about to happen. So do we have a break of this current high? No, we have a break of this low. We have a break and a close below. Now, depending on what your rules are, If you have a break and a close outside of this low, that may mean trend is over, or it could mean that you just need to pause and reanalyze. Just like with our uptrend, we're going to use the same horizontal lines and our trend lines to identify this downtrend, except we're going to be looking for a break of the low rather than a break of the high, and our retracements are going to be green candles. For this example, I'm going to use a retracement of 3 consecutive candles. Now we're coming out of an area of consolidation, and we've had this first push down with a 3 consecutive candle pullback. So I'm going to mark this as our first leg, and we do not yet know if we are in an uptrend or a downtrend or in more consolidation. So we have our first move, we have a 3 candle pullback, and we have a test of the high, but not a break and a close beyond it. We are looking for a break of either one of these lines, and that will help us indicate our first move of trend. Let's see, we have a break and a close below, a clear close down there, which means I can indicate our first high. Now, I realize this is currently a higher high, but because of my rules, I class this as a high in trend as long as our bodies did not close outside that high. So pushing down, we're going to look for a 3 consecutive candle pullback, which we have here. So while the pullback happens here, I'm once again looking for the lowest point of that entire move. So that becomes our new low. Now I'm able to move our low to be here. I'll actually move our high to indicate that high. And we'll wait for a break of the low to push forward to continue our downtrend. And there we are. We have our first break of our low, which would indicate that this is our new high. And we'll wait for another push down. 1, 2, 3. Okay, so that will indicate our new low. And we'll move our low down there. Waiting for a break of that low. There we are. We have our break of our low. So we'll find our highest point, which will be up here. That'll be our new high. Continuing on. Once again, this area does not really count because that is within the bounds of our trend channel. So we aren't drawing lines within here because this hasn't made a lower low. Now we have our 3 candle pullback there. So this will be a relevant trend line. I can mark this as our new low and waiting on a break of that low to confirm our new high point as well. There we are. We have a break and a close just beyond it. So because my rules say a break and a close outside of the low indicates a new low, that is technically going to be my new low. And we have 3 consecutive candles after. And I better move my new high down to here. Continuing forward, we're waiting for a break of that low. We have a test of the low. And there we are. We have a break and a close well below it. So let's mark this as our new high. And waiting for 3 candles again. And that actually brings us to the end of our chart. So looking over this, if I hide our candles, we can once again see that we are in trend. We are making lower highs and lower lows for our downtrend. And using our high and low lines made it very easy to spot these levels. Now I haven't marked this as a low yet, as we are waiting on the market to show us what's going to happen, and I don't yet have 3 consecutive counter trend candles to confirm this as our current low.